Hey, what's going on, guys? My name is Richard and welcome back to my channel. Today we'll be taking an in-depth view into Shopify, which is my stock of the week, and we'll be using both technical and fundamental analysis to try to determine if it's overvalued or not. And just taking a look at the Marketsmith interface, which is sponsoring this video, you can see that the PE ratio is 999, which by any traditional metric means that this is extremely overvalued and the stock should be crashing and burning instead of breaking out into new all-time highs. And just looking over some articles the past couple of days, people are extremely bearish, and everybody is saying this is overvalued and that shop should not be where it's at currently. And what I think these analysts and writers fail to realize is that Shopify is a huge growth company in a new and promising industry, cloud-based e-commerce, and it's uniquely positioned to benefit from this current situation as more and more companies have to establish an online presence. And given the earnings, which are huge, sales up 47%, earnings up 217%, analysts and writers are always going to be behind the curve when it comes to Shopify because they can't understand the huge growth potential that this stock has. And just taking a look at the funds, which really are what drive the stock upwards, you can see a steady increasing trend. And in June 18th, or June of 2018, you can see we had 683 funds invested into Shopify, and currently about 2 years later, that number has basically doubled. And if you know anything about the stock market, you know that retail investors don't drive a stock's price up. It's the institutions and funds that soak up that supply, and that leads to increased demand driving up the stock's price. And that's exactly what happened, and you can see kind of evidence of that in the most recent consolidation right here in this cup. You can see after it was dropped down about 49%, you had this rapid increase up the right side of the space and a breakout into new all-time highs very shortly after the correction ended. And this type of action right here isn't driven by normal investors. This is funds buying and picking up shares into the company. And then it had a nice consolidation right at that pivot level, and it recently moved up and then broke out strongly today after its standout earnings report. And this is a clear indication of the supply and demand that surrounds this stock. And this means that this is probably going higher, and it is likely to continue its current upward trend. And taking a look at some other fundamentals, you can see the annual estimates over here. For 2020, it's only 2 cents currently, which is down 95%. But most likely when they update these estimates, it'll be driven up because of this most recent positive earnings report. And for 2021, you can see that the estimates were only 51 cents, and likely that will increase as well once again when they update these metrics. And taking a look at the IBD ratings, the EPS rating is only a 33, which is kind of a negative for me, but recently it's been doing very well, so I'm sure that will increase in time. The group RS is an A+. As I said, this computer software enterprise group is extremely strong. It's number 5 out of the 197 industry groups, and that's exactly where you want to be focusing your attention and trying to buy companies in those top industry groups. The SMR rating is a C, accumulation distribution is an A, that's showing funds are buying this company, and the overall composite rating is a 96. So overall, from my point of view, the earnings and sales growth is what's driving the stock upwards. And for me, the fundamentals don't show actually that's overvalued. I don't look at the PE ratio or the PEG ratio at all. For me, I'm more of a traditional William O'Neill type investor. I'm looking for stocks with those huge earnings and sales growth numbers because that is what drives institutions to invest in a company. All right, so now that we've talked about the fundamentals a little bit, let's now head over to TC2000 and talk about the technicals. Because for me, even if a stock has great numbers behind it, great earnings growth, sales growth, none of that matters unless the chart matches the thesis. And for me, I always look for all the time frames to be kind of aligned, and I want to see an uptrend in the long term, intermediate term, and short term. And for me, Shop basically meets all that criteria. It's a nice consolidation pattern right here, cup and handle or double bottom. And take a look at the monthly chart, which I use to determine that longer term trend. You can see that it's basically the ideal pattern. It's in a nice long-term uptrend. All those moving averages are moving up, and it's basically been increasing since its IPO. 5 years ago. And you can see it since then, it's up 2,500%, which is fantastic. And overall, this is basically a rocket ship heading to the moon. And all we have to do is find a nice low risk entry and hang on for the ride. So that is the longer term trend. And then I would go to a daily chart and try to find those low risk entries. And I'll make an entire video on my entry setups that I use this Friday. But basically I look for breakouts through prior resistance or one of my dot entries. And overall, there's a bunch of promising entries recently for Shop. You've got this prior all-time high, you've got this shorter term pivot, this pivot, and then this green dot right here. So how would you use this? Well, basically, once it forms a prior high that it isn't able to break for at least 5 days, I would draw a solid line in TC2000 marking that resistance area. So I've already done that, so I'll just show the annotations. So after it forms this all-time high, you draw this line in and you wait for it to break through that line on above average volume. I drew another line right here for this resistance area, then right here, which also lines up with the 50-day moving average. And those are potential entries as the stock moves up the right side of the base. So the first kind of actionable entry I would use is this green dot on above average volume, which is basically a 10-4-4 stochastic cross, indicating a momentum shift upwards. So that would be my first ideal entry. And you can see that you had had a nice cushion going into earnings and a nice gain overall. So I am not in Shop right now. I'm not invested in this. And I was looking at other stocks at this time, so it wasn't quite on my radar. But I'm kind of going through my thought process and how I would analyze the stock and try to find entries. So that's the first setup. Then you've got the break and close above the 50-day moving average right here. That's another potential one. Then a break through this prior pivots, which is another one. Another breakthrough prior resistance right here on above average volume. And finally, break of the prior all-time high right here. And you can see that on those resistance breakthroughs, volume is higher. That's exactly what you want to see. And it had 2 weeks where it was just up every single day. That indicates to you that institutions are taking up positions in the stock because they are what drives the stock upward like this. And you can see it rested right after it broke through all-time highs. That's exactly what you want to see. And I actually had it on my watch list for this upcoming week. And now it's up about 18% this week after it reported excellent earnings yesterday. So that is kind of the technical overview. And if you're having trouble kind of identifying these key pivot areas, I'll have a link in the description to my Python pivot video, which basically does the work for you. And this is kind of the result. It'll basically plot those key price points, those key resistance areas for you on a chart. So you can see 470.57 is this first pivot. You have the green dot around here. Then it formed another pivot right here. And now it's 8% from this pivot. So I really think this program is very useful, especially if you're getting used to this and trying to map those prior resistance areas, because this does all the work for you, and you can basically learn how to find those pivots on your own. So that is kind of my technical analysis of Shopify. Overall, the supply and demand pattern for me is fantastic. You've got up days on huge volume. You can see some pocket pivots right here. And it's been increasing on above average volume, breaking into new all-time highs, which is exactly what I hope to see. So overall, Shopify may be overvalued in using the traditional metrics, but for me, using the growth perspective, this is a potential true market leader, and I'll be watching to see if it pulls back and sets up for another entry. So thank you guys so much for watching. Please remember to leave a like down below if you enjoyed the video, and of course, subscribe if you're new to the channel, and I'll see you guys in future videos.